And we're here.
We're up.
We're up. We're down. Right. I'm up. He sees me. I'm down.
Haven't thought about that in a while.
What do you got for us this week, man?
It's
been a crazy week.
Yeah. I mean, they call it the Ides of March, right? This is like the Ides of September. We talked about last week the first half of September and the last half of September as like the two ways you can kind of divide it up. In the first half, usually the market moves higher. In the second half, usually the market moves lower. Usually is on the second half of September is 7 out of the last 8 years it moves lower the second 2 weeks of September. So we're just entering into that time zone. It seems like it came a little bit early this month because the last 2 weeks have been kind of rough. But
let's jump into it.
Going forward, let's see what we got. Okay. Market this week, yep, another rough end because Friday was probably the worst day of the week, but another rough end to another rough week for the stock funds. C fund finished down only 0.5 point. S fund down about 1/4 point. I fund was the big loser on Friday, and for the week it was down 0.8 point. And the F fund was flat, literally finished exactly where it closed last Friday. Closed this Friday where it had closed last Friday. So not too much movement there on the F fund. So show this week, we're going to take a look at this idea called alternation. And it's part of, it's an Elliott Wave guideline. People don't talk about it very much, but it potentially could help us to see what's going to happen here on this wave 4 correction that we're either in or getting ready to start. And then we're going to do a pretty significant deep dive into Elliott Waves, starting at the 2009 low. I'm going to do the best I can not to make it so geeky that everybody's eyes don't roll in the back of their head. And then intraday of the C fund and the 18-month weekly charts. All right. So, yeah. It's
that's a lot.
Yeah. So alternation. Alternating.
Yeah.
Right? Okay. It's not, there's a lot of words there, but it doesn't have to be all that complicated. So it's a guideline. It's an Elliott Wave guideline, not a rule. That's the first thing, right? So it doesn't mean that it has to happen to make the, if the alternation does not happen, the numbers on the count don't change.
Don't change, right?
The rules, when the rules get violated, the numbers of the count actually changes.
Yeah. So there's rules and then there's guidelines. There
are only 3 rules, and we're gonna get to that in a minute. And everything else is a guideline.
This is
Okay. This is one of the guidelines. So a common guideline called alternation observes that in a 5-wave pattern, Elliott waves, right? Wave 2 and 4 often take alternate forms. A simple sharp move in wave 2, for example, suggests a complex mild move in wave 4. So we're going to show that in a chart, and we're going to talk through that. Elliott observed that alternate waves of the same degree must be distinctive and unique in price, which makes sense, right? If the 2-wave is kind of flat and the 4-wave is deep, then they are distinctive. The time period covered by each formation, however, is the major deciding factor in the full manifestation of the rule of alternation. So the most important part of alternation is that the time frame of, say, the 2-leg should be significantly different than the time frame of the 4-leg. Okay? A sharp counter-trend correction in wave 2 covers a short distance in horizontal units. This is, for example, a short counter-trend correction, which is wave 2, covers a short distance horizontally. This should produce a sideways counter-trend correction in wave 4, covering a longer distance in horizontal units, or vice versa. So
you already lost me.
Yep, I lost everybody.
Any sentence with formation, manifestation, and alternation in it shouldn't.
You know what? I should have thought about that. I'm going to flip to a chart before we even go.
Go to a chart before we lose everybody.
The link down there is to a section of a Wikipedia article. That talks about that specifically. It's pretty good. But let me just go to a quick chart so that you can see what I mean. We're going to come back to this in a second, but here's the idea of alternation. Forget about the counts right now, all right? This could be a 2, or this could be the 2, okay? So here's the thing. This is the 1. This is a correction to the 1. This is the 3. This is the correction of the 3. Okay? So the concept is this correction here is flat.
Generally flat, yeah.
Right? This correction here,
steep,
alternation. This correction is from, first quarter of 2010 to third quarter 2011. This correction, as we remember, took 2 weeks. Time alternation. Right? That's the concept. Pretty simple when you look at it on a chart, right?
Yeah.
Okay.
And it's a real chart.
This is the chart from 2009
to. That's what happened.
That's what happened. Yeah. And it happens patterns within patterns within patterns. And we're gonna look at all of it. So that's the idea of alternation. Unfortunately, on the newsletter, I cannot get across what we just did writing it in the newsletter.
Yeah, it would take pages.
I can't do it. I mean, the pages would look like that. Would look like what we just.
But you'll do it in the video.
Yeah,
or just say,
I keep referring. Go watch the show.
Go watch this show.
Yeah. Okay. So now we're going to go back to the chart that we looked at a minute ago, because that is the big picture. That's as far back as we need to go in terms of the Elliott wave count. If you're looking for a link to basically the cliff notes of all things Elliott wave and how Fibonacci relates in there, this is the link. You don't have to buy the Elliott wave forecast, but if you go to elliottwaveforecast.com/Elliott wave theory, it gives you in like maybe 3 pages literally every single highlight that there is in Elliott waves. It's great.
It's all condensed right there.
Yeah, it's really good. It gives you all the rules, the guidelines, the impulse and corrective patterns, all the Fibonacci's, like everything. It's all in one place.
Nice.
Okay. So this is the big picture. And it's all about waves within waves, right? This 2009 low, for any of y'all that are as old as we are, you remember 2009 low here. We had 2008 was, well, it wasn't that high, but 2008 was up here. 2003 was a low. 2000 was a high, and it kept going back. This here, so 2009 is that low, is the 4 wave of the bull market that began at the bottom of the Great Depression. Okay, so this is a monster, almost 100-year, pretty much almost 100-year bull wave that we've been in. And the last leg of that began at the low in 2009. So now we're looking at this wave 5 is going to actually be, so if this is the big 4, this is going to be the big 5, probably. Not that we have to worry about that right now, because it doesn't really help us in making day-to-day reallocation decisions. So 2009 low is the bottom of the 4 wave from the Great Depression. Once wave 5 is complete, we are definitely in for some rough years ahead, but we don't need to worry about that just yet. So you can see the guideline of alternation in wave 1 and 3 and in wave 2 and 4. So we already talked about alternation here in 2 and 4. So we talked about this being the consolidation. Let's go back and look at it with the actual numbers on there. The way I'm labeling this is this horizontal piece right here. We came down to this horizontal. This is the wave 2. This is the wave 4. It's still, wave 2 took a lot longer and was relatively flat. Wave 4 was much faster and much deeper. Okay, so that's alternation in terms of wave 2 and 4. In terms of wave 1 and 3, you got 1, 2, 3, 4, 5. Gave you wave 1. Wave 3 is 1, 2. This is a corrective pattern in here also, an extension in here also, that I'm not going to try to draw out. But 1, 2, 3, ABC is 4, and you have another extension in here, so that eventually we get to 3. We have multiple extensions in here for the wave 3, and then the wave 4, and the wave 5. We think we are 1, 2, 3, 4, 5. That's what we're expecting. So wave 1 was a straight 1, 2, 3, 4, 5. 5 wave up to wave 1. Wave 3 is this extended patterns within patterns within patterns over almost 10 years to get to where we are at the top of wave 3. Okay. So wave 2 is a shallow, longer consolidation. Wave 4 is a much deeper, faster consolidation. And we see this play out again and again within the waves that are within the waves. Okay. So the next thing we're going to look at is just wave 3. So this whole piece right here. So here we were at the bottom in wave 2. And within wave 3, we have 1, 2, 3. ABC is 4. And then the 5 gives us a 1, 2, 1, 2, 3, 4, 5 for 3, 4, 5. Extensions within extensions within extensions. Okay. And you can see the alternation playing out in all those extensions. So the last thing I want to point out on this particular slide is this piece right here, this 5 leg right here. This does not play out in 5 legs, right? It goes up. We have a ABC consolidation of some sort there, and it starts to do wave 3, but then COVID happens and we come down. There is no rule that says wave 5 has to extend in 5 waves. So just keep that in mind because you're probably going to see it again.
You're going to see this later.
I feel like I'm going too fast because it took me a long time to put all this together, and I know it's you have to think about it. You got to look at it and think about it, and so.
No, I think the pace is good. I'm actually, you see me, I'm looking at the screen because I can't see it as well as you do.
Yeah.
You got me.
Okay. All right, good. If I got you, that's good. So this is, here we were at the top of 3. Here we are at the top of 3. Okay. We had COVID over a couple of weeks. There's not much to talk about there. That's the 4. Okay. Now we had a 1, 2, 3, 4, 5 for 1. ABC for 2. So we had a shallow, relatively long 2. If the 3 just ended right here, right? Then we should get some kind of a 4 and then a 5. Okay. So far, it's pretty much been the same as it's been on the other charts, but now we get into a couple of different things. So we said we're going to say what the 3 Elliott Wave rules. 3 rules. Everything else is a guideline. Rule number 1: wave 2 cannot go deeper than the beginning of wave 1. So let me just show this back here. This was the higher degree 2, so it was the bottom. We said this is a 1 and this is a 2. This 2 does not go below the beginning of 1.
And that's a rule.
That's a rule.
Okay.
So we're good, right? This 4 cannot go into the price of 1. So 4, the bottom of 4 is above the top of 1. So we're good, right? So where we are right now, we did the 1, ABC for 2. It's basically a flat, shallow, relatively long consolidation. If we're at the top of wave 3 right now, then what does that mean about wave 4? 2 things, right? We expect it to be deep and short time duration. That's number 1. Number 2 is it can't go into the price territory of wave 1. So that means that red dotted line is as low as the wave 4 can go.
That's a pretty far down though.
It's pretty far down.
Yeah.
But it puts a limit on it. So we said because it's a rule, it would change the way the chart is numbered, right? So if wave 4 was to do something like that,
Mm.
then this wouldn't be a 3. It would be the 5.
Uh-huh.
And if you see it now, this one, a little consolidation here and then up is a lot like this. Wave 1, little consolidation and then up, and it came down. So there's no rule that says that wave 5 has to play out in 5 legs. But the way it looks right now, I mean, the assumption is that it does play out in 5 legs. So that's plan A.
Yeah.
Plan B is this will turn into 5, and then we'll know it. Because if we are down here somewhere.
So draw the 2 options, right? And when we say we mean like the greater community looking at this,
right.
Not Jerry and Conan.
Right.
So if you're watching this isn't just, Jerry in his living room.
Yeah, no, my name is not Elliott. I didn't make the shit up.
Yeah.
No.
Yeah, there's a lot of people that are saying the same thing, that we've got basically 2 options. I mean, we got two
primary.
Yeah, two
counts.
primary counts, and draw those real quick just to give everybody an idea. We've done it on other shows, but just so it kind of comes in, just to where it would go from the 3 right there. If that is the 3, or if it's the 5.
Okay. So based on the 2 rules that we just talked about, it can't go below that dotted line.
Right, but it could go to the dotted line.
It could go to the dotted line. Based on the second rule is that we expect it to be a sharp but short consolidation because of alternation from this one, right?
Mm.
So something like maybe this was an ABC, right? Consolidation. Maybe this one is like a 1, like a 1, 2, 3, 4, 5. Like deep, fast.
Yeah.
And then we get a V bottom at the bottom, and it comes back up.
Right, kind of like it was back there.
Yeah.
And, yeah.
In prior charts, yeah.
Yeah. So that's one option.
That's one option. And the rule of alternation, guideline alternation,
Yeah.
right? So the other possibility is that we do some kind of sideways consolidation here, and then we go higher. I mean, you could definitely have 2 horizontal consolidations. It's just that the guideline says more probable than the reverse. We get a short, deeper consolidation.
And for us, we don't want to be in there during that.
Definitely not.
Which is why we're kind of back and forth right now, because there's nothing to go off of yet, but
Right.
it's the signs are there.
Yeah, the signs are definitely there.
And I don't know why you would want to. We're going to have the people that just say, write it out, and you go, okay, that's fine.
You can write it out.
But I don't want to. I don't want to go from there down to 3,600.
No, I don't want to do that. And I want to know, like, if it does come down somewhere close to that 3,600 line, the probability is that it finds support above that level. So if it does come down there, I'd actually buy it there.
Yeah.
I'd sell it if it closed below it, but I'd buy it there.
If it closes below it,
then everything changes.
Everything just got real.
Everything just got hugely real.
Yeah.
But again, we talked about it. I think in the last show, and we're going to talk about going forward. It's not as important right now, but the next thing that we're going to be seeing is this decline. The recovery after that decline is going to be really important, because if we get this decline and we come up here and we don't make a new high and it rolls over again, that's a different level of problem. We've seen V recoveries every single time off the 50-day moving average this year,
Mm-hmm.
and it always went to new highs. When it doesn't go to a new high, now we got a
serious problem.
Yeah. And again, it's a problem that could end up being a sideways consolidation, or a problem being it could go much, much lower.
Right. Either way, you want to be watching it.
Either way, yeah. I mean, it's again, we're not saying the market is at a top or has already topped. I mean, we're still at least partially in the stock fund, so we're just watching it really closely right now.
Yeah.
Okay. So basically, to sum up this thing, I got 4 observations to wrap this thing up. So we got the guideline of alternation, which we definitely went over. the rule of wave 3, then the rule of wave 4, and then the guideline of wave 5. So the guideline of alternation says wave 4 should be a deep short, should be deep and short instead of an ABC correction, because we had the ABC correction here in 2. So we should get a relatively short, deep correction into wave 4. These are just the rules and guidelines. It's not what I'm saying is going to happen. I'm just relaying what Elliott says is going to happen. And again, the alternation is a guideline, so we can't rule out a shallow sideways consolidation, but we should expect a sharp, fast wave 4. Okay, wave 3, the rule for wave 3 says that wave 3 can't be the shortest leg. So what that means is we were down here at the COVID low at 2200, right? The top of wave 1 was 3600. That's 1400 points. Okay. Wave 3, if we give it the benefit of the doubt and call it, say wave 2 finished at that point right there. It could be this, but this is a little bit lower, so I'm going to say it for now to make the numbers easier. 3200 is the bottom of wave 2. 4600 would have been 1400 points. So if we had gotten above 4600, then wave 3 would have been longer than wave 1. So as it is, wave 3 is just barely less than the length of wave 1. So according to the official Elliott rules, wave 5 now can't be longer than wave 3 because wave 3 can't be the shortest leg. So wave 3 now has a limit on it of somewhere just less than 1400. So what that means is wherever wave 4 ends up being, whether it's a sideways consolidation or this deep, sharp consolidation, theoretically, it can't have more than a 1400 point move from the bottom of 4 to the top of 5. Right? So we shouldn't be expecting, if we have seen the top here of 3, and we get some kind of consolidation here in 4, no matter how it looks, once this thing bottoms out at 4, we should not expect this big, huge running 5. We only got, theoretically, 1400 points to play with, from the bottom of 4 to the top of 5.
And after 5?
I don't even want to talk about that right now.
Okay.
After 5, things could get ugly. And I didn't do this on purpose because I don't like to try to use Elliott Wave to figure out time. There is a way to use Elliott Waves because it does work both in price and time. I just don't like to use time. It makes it look way too much like a crystal ball, and I don't like to do that. But coincidentally here, March. We know that March is the second worst month of the year, right? So it wouldn't be outside of the realm to see a sharp, deep 4, then take several months to get up to the top of 5 to get that 1400 points, and now we're basically right at March to where the 5 starts coming back down. Mm. We shall see. So again, wave 5 usually tops out higher than 3, but that's not a rule. So if 4 gets down here super deep, you only get 1400 points. If wave 5 only came to here and turned over, that'll count. This could be a wave 5. It doesn't have to get above wave 3, but it almost always does. And wave 5 doesn't have to complete 5 waves like we saw in the last chart. Wave 5 can come up like 1, ABC, some kind of consolidation, and then 5 and finish. So
either way, we're watching.
Watch close. Okay. Intraday on the C fund last week. So the patterns are interesting because now we're looking at a 2-month chart. The whole chart is 2 months, and each tick on the chart is 30 minutes, right? So we had the top up here, the recent top at the beginning of September. And then we had what at my count is 1, A, B, C, 2, 3, 4, 5. So I think this is going to be a 1. Either way, you can see this this pattern right here versus this pattern here, they don't look anything like each other, right? They don't look anything like each other. This is a impulse move down. This is a clear corrective move from that impulse move down. And the fact that we closed below this low, again, on an intraday basis, certainly makes me think that the price continues lower from here. So on an intraday basis, it looks like this is a 1, A, B, C, 2, and we're in the 3 leg coming down. Doesn't mean it's going to happen, but that's what it looks like to me on an intraday basis. If we get below this low here in August, then people are really, really going to take notice. All right. So the 18-month weekly chart. So now we've done really big from 2009, brought it in, but it's all been on a weekly level. Then we zoomed in real quick to a 30-minute chart. Now we're zooming back out again to the 18-month weekly charts that we've been doing here for quite a while. So even though we just talked about all the possibilities of Elliott and all that, and the intraday chart looks pretty sketchy at best, when you go back out and look at if you're thinking about reallocating your TSP based on a weekly basis, this is what we've been talking about. So this is a 20-month weekly chart of the C fund. It's still riding the 10-week moving average line, that blue line. It closed just barely below it this week, but that falls in the realm of, give it another week just to make sure it really did close below it. If you're trading it, if you're reallocating on a weekly basis. The indicators are all definitely at the top and tending down. Not trending yet, but at least tending down, you can see. It's a time to at least take some money off the table, I would say, if you're in the stock funds.
If you're all in right now, you're at a high risk level.
Yeah, for sure. And the risk level goes up exponentially if we get down here to 40. What is that? Let me just zoom in because I can't see it. If we get down there to 4,200 or 4,300, we will have significantly broken that 10-week moving average line, and then we haven't been below the 10-week moving average line like that in quite a while. Okay. S fund, not too much new to talk about. It's been in this flat consolidations for almost the whole year. In the last 4 weeks, it's held up above its 10-week moving average line. So the last 4 weeks, the S fund has really been trying to break out there. It continues to get support at that 10-week moving average line. So we're hopeful that it breaks out to the upside, but we won't know until we know. Indicators don't look great. Stochastic starting to tend down. MACD has already been going down. RSI is not looking great. The S fund doesn't look all that bad right now, but I wouldn't be buying it if I didn't already own it. I fund looked like we had a breakout 3 weeks ago, but clearly at this point that breakout has failed, and the I fund did get support at its 10-week moving average line this week, but again, technical indicators are all seemingly rolling over. So I would not be buying the I fund right here. Having said that, obviously the 10-week moving average line is roughly the same as the 50-day moving average line. So for all three of these stock funds, that 50-day 10-week moving average line is pretty critical right now. They're all struggling to keep support there, and if it fails, there's a long way down. F fund is, we always say, it's the place that we would go if the chart looked good instead of the G fund, or in addition to the G fund. F fund right now, it's not looking great. It's trying to hold support above its 10-week moving average line, but it's right on it, and the chart just doesn't look great. Even if it is able to break out in a positive direction, it's going to have resistance up here at 120, this prior high up here, and it's got a lower high here, and so it would make sense that this kind of tops out here. So I wouldn't, if I were deciding to get out of the stock funds, I wouldn't reallocate into the F fund. Okay. If you are a subscriber to the site, then the newsletter this week goes into the daily charts, a 1-year daily chart, and there's a little more specificity about, what I'm doing in my TSP account and things like that. So we try to do a little more specific analysis in the newsletters than on the show.
Yeah, we definitely do more specific analysis in the newsletters. I mean, that's what we, try to give our folks that are subscribers is this is the education piece.
Yeah.
The deep dive analysis, what we're really thinking, where we're thinking about going is all in the newsletter, and so it's a lot more valuable, and that's because it costs money.
Yeah, but this week both of these kind of go together for sure.
Yeah.
I go into a couple of different charts. We were talking about the possibilities for the 4-leg on this correction. There are definitely some support levels that are more likely than others, and we talk about that in the newsletter.
Good. If you guys have questions, put them down in the comment section, whether you find this on YouTube, our website, or on Facebook. You can find this show every week at 6:30 p.m. on Sunday. And newsletter is posted sometime around 6 p.m. on Sunday, if you remember. And if you like what you see, please share it with your friends. Hit the like button, subscribe button, all that stuff people tell you to do.
Yeah.
More than anything, just keep watching, because we hope you guys are getting some value out of it. We love talking about it, and we love trying to educate people on how to do it. Yep. All right. So, if you like it, share it with your friends. And we will see you next week.
Have a good week.
We are going to be on the road all week, but we will be back next week. And see you then.